Good afternoon, everyone. Welcome at today's webinar, Buying a Home in The Hague. My name is Rick. I am a housing specialist at Expat Housing Network. I'm from the Netherlands. I live in Rotterdam, so I'm responsible for the region of South Holland, Rotterdam, The Hague, and anything in between. I lived in South Africa and Colombia, so like you guys, I know what it is to settle in a new country. Then, what are we going to discuss today? So first, we have a short introduction. Then we're going to talk about the housing market, the market drivers, the topic of savings. Also very important to know what do you actually need in order to be able to buy a property. 3 tips to win in the current market. And at the end, I will recap everything by going over the timeline. First of all, at EHN, we think that greatness is achieved in the agency of others. So let me introduce the team. Well, you already know me, Rick. But today I'm joined by my colleague, Rafaela. Maybe you can introduce yourself as well.
Hello, good afternoon, everyone. So I'm Rafaela. I am from Brazil. I am sitting here in Groningen. I work for EHN for almost 2 years now, so I'm responsible for this area, but I also support the clients in the south as well. I speak Portuguese, English, and Spanish, so if you speak one of those languages, I can help you with that. And that's it.
Yes, thank you. Yeah, good to know. Rafaela will be answering the questions you guys have in the Q&A. Again, if they're not answered during the webinar, we will cover them at the end. And then to complete the team, we also have Ludo. He's responsible or living in Amsterdam, so also responsible for the region of Amsterdam. And then our other Brazilian star, Giovanna, she lives in Eindhoven, so she's responsible for the south. So basically, we cover almost the entire country. A brief introduction about EHN. First of all, we are no traditional real estate agents. Today's webinar is focused on buying, but we also support with renting and letting. If you're interested in any of the other services, feel free to have a look at our website or schedule a call with us. One of the main differences, right, if you compare EHN with traditional real estate companies, is our pricing. So we charge a percentage over the appraisal value, whereas traditional agents often charge a percentage over the purchase price. We said we do not want to give our clients the feeling that we just want the highest price so we can earn the most, right? So therefore we charge over the appraisal value, which is defined by an independent party. So what we're trying to say is that we really want the best deal for you, but we'll have a look at our packages at the end of the webinar. And then what I just mentioned and what you could see from the team, we are either expats ourselves or we have lived in foreign countries. So we know what it's like to settle in a new country, and therefore we're able to understand your needs quite well. The added value, first of all, selling agents take our offers more seriously, right? Most of the times we already work with them, so they know we did a check on our clients. We put all the right information in the offers and so on. And it is the case that selling agents prefer to work with buying agents. And because of our network, we're also able to book viewings when it's for you guys or people without an agent, no longer possible. Most of the times, agents reserve special spots for their colleagues. Very important for those of you who already view the property, you might have seen that every house has a lot of documents. And unfortunately for you guys, those documents are Dutch, right? So we make sure that you know everything what you should know. And then maybe the most important thing of the buying process is that we help you to define the market value through market data, right? We'll look into this topic a bit more into detail later in the webinar. But very, very important to know the market value before you submit an offer. And then we'll inform you about the rules, regulations. Every property has its own rules, regulations, restrictions. Maybe you would like to rent it out in the future, right? And then you do need to know this upfront or before you submit an offer, because it would be very sad if you buy a property as an investment, but you're not able to rent it out. And then last but not least, we make sure that you guys don't make the same mistakes as we made. We've bought a lot of properties. I think we've seen it all. So yeah, with our experience, we'll make sure that you experience a smooth buying process. So let's talk about the market, right? First, we'll have a look at the graph below. There you could see, or you can see the development of the average selling prices in the Netherlands. From 2007 to 2013, you'll see a decrease. Of course, this is the financial crisis. I think everyone knows what happened. And then from 2013 till basically last year, you see that price increased with a rapid pace, right? Especially in the last 2 years, prices increased by crazy amounts. The latest numbers we have, they date from Q1 this year. And you can see that the average purchase price was 394,000 euros. Well, if you look at the graph, you'll see that it's lower than in 2022. Again, I think most of you know or heard about the decrease, or that housing prices decreased. So indeed, that is the case, right? Interest rates went up. People were a bit like, okay, what's going to happen? So therefore, prices decreased. Since the average purchase price in 2022, was 407,000. For new builds, of course, the price is a little bit higher than for existing houses. So in Q1, the average price was 468. This, of course, has to do with the quality you get with a new build compared to existing properties. But we're here today because you guys are interested in The Hague. So let's zoom in The Hague. And there's some interesting numbers. So first of all, the houses sold in Q1, 1,356 houses were sold. And that's a decrease compared to the year before, right? In Q1 2022, the interest rate low. And now you'll see that, slightly or around 12% less houses were sold. But then, and that is interesting for you guys as potential buyers, the houses for sale doubled, right? So in Q1, 1,850 houses were on the market, which is double the amount compared to the year before. So of course, this also results in less competition, less overbidding, and lower purchase prices. And that you'll see in the next point. So the average purchase price for The Hague was 388,000 euros, a little bit lower than the average in the Netherlands. A decrease of 13.5% compared to the year before, and most of it happened from Q4 to Q1. Well, you see similar numbers when you look at the average price per square meter. And then also very interesting is the sales times, right? So this increased, which means that the process takes longer. I think this used to be around 28, 29 days in the past. And you'll see that now you have more time. So what does it mean, right? If I look at the market 2 years, 1.5 years ago, it was very hard to schedule viewings. Almost every property had a deadline. So then they scheduled, let's say, 40 viewings in 1 week. And they said, okay, you have until Tuesday, 10 a.m. to submit your offer. Now you'll see more often that you're able to schedule a second viewing. There's more negotiations. So definitely a healthier market than in the past. Then we saw the graph, right? We saw the prices increased significantly over the past years. But what caused the price to increase? First of all, we have some fiscal benefits in the Netherlands. The first one is the tax exemption. So when ownership from one property to another, or one person to another, is transferred, transfer tax has to be paid. If you're going to live in the property yourself, this is 2%. If you buy a property as an investment, you would have to pay 10.4%. However, if you buy your first property in the Netherlands below 440,000 euros and you are below the age of 35, you're exempt from paying this transfer tax. So on a purchase price of 400,000 euros, this would already save you 8,000 euros. Then the interest rebate. So the interest you pay on your mortgage is tax deductible. I think this year you can claim back around 37% of the interest you pay. Then no capital gain. So a lot of people sold their properties with crazy profit, right? But in the Netherlands, no taxes have to be paid over the profits. Then the tax-free parent donations. This is something that is applicable to Dutch people or people that pay taxes in the Netherlands. So last year and the years before, people were able to donate around 100K to their children if they were going to buy a house without paying any tax on it. They lowered this to 30,000 euros for this year, and it says ending because next year this is no longer possible. If money comes from abroad, no taxes have to be paid anyway, so good to keep that in mind. Then we already discussed it, right? The low interest rates. I think the rates beginning last year were around 1.5%. Then the interest rates, they increased quite fast to, I think at the moment it's around 4%. But of course, money was almost for free. So therefore people could borrow a lot of money and therefore also offer a high price for their houses. Then the high rents, some of you mentioned this already in the poll, but in the Netherlands, the rents at the moment are extremely high. So therefore people are looking for alternatives, right? If you could pay the same amount for rent of a mortgage, of course, people rather build up equity than paying off someone else's mortgage. And then last but not least, and this is maybe the most important factor, is the lack of supply. So at the moment, we have a housing shortage in the Netherlands, right? It's a very competitive market. It's around 300,000 houses. And of course, prices are defined by supply and demand, right? It's basic economics. And it's just the case that there's such a huge demand for housing that the prices increased dramatically. Then if we look at the current market, right, I mentioned that the interest rates now are around 4%, I think, which is a big difference compared to last year. But if you look at it from a historical perspective, it's not even that high, right? So I think in the past, if you ask my parents, back in the days, they said if you could have an interest rate for 4%, fix it for as long as you can, because it will never get lower. Well, we know what happened, but from a historical perspective, it's still not too high. In general, so right, in the entire Netherlands, there's 80% more listings. Well, we saw that in The Hague, it's even a bit more. But again, for you guys as potential buyers, definitely a good sign, since there's less competition, more properties to choose from. The process is a bit longer. So I would say a bit of a healthier market than we had. Of course, this also results in less overbidding. It doesn't mean that this is not happening anymore, but it's not as crazy as it was. But we'll have a look at overbidding in a bit. And then, what I said, at the moment, we still have a housing shortage, right? It's 300,000 houses right now. And we'll see in a bit that it's even expected to increase to 400,000. So I think for you guys, the question is, right, is it still a good time to buy? What I see in the current market, people were a bit afraid what's going to happen because of the rapid increase in the interest rates. But now I see, since the interest rate stabilized, that the market is picking up again. So you'll see overbidding again. What I said, it's a good time, but I think people have more trust in the market than a few months ago. So in the newspapers, you might read that the prices decreased, but I'm curious what the next numbers will be if we look at Q2 this year. Of course, whether buying is a good decision for you depends on your personal situation, right? I can't predict the future, but in general, if you're planning to stay for at least a few years, I would say it's still definitely a good time to buy. Then some other relevant topics I want to highlight. The first one is the self-occupancy obligation. So if you are planning to buy a property in The Hague as an investment, please be aware that there is a self-occupancy obligation for properties with a WOZ value up to 405,000 euros. So what does it mean? Basically, you're not allowed to rent it out only under strict restrictions, like to your family or when you leave the country for a year. But yeah, very good to keep that in mind. Then the NHG threshold increased to 405,000 euros in 2023. Maybe it's good to explain what is NHG. NHG is an institute that helps you when you can no longer afford your mortgage anymore. For example, when you lose your job or your partner dies, then NHG, together with the bank, will look into your situation to see if they can make your mortgage still affordable. If that's not the case and you have to sell your property, and let's say your debt is higher than what you earn from selling, they're also able to cover the difference. Well, of course, this sounds really nice, right? Because of NHG, there's less risk for a bank, and therefore the bank is willing to give you a discount on your interest rates. So if you're looking for properties up to 405,000 euros, very interesting for you to make use of this. And then I already mentioned this one. We already have a shortage, but it's expected to increase even further to 400,000 houses in 2025. And this has to do with everything that is going on in the world right now, right? We have the war, raw materials are super expensive. It's hard to find good labor. Our government is doing their best to fix this. I think the goal is to build around 100,000 houses a year, but the max they ever built, I think it's around 70 or 80,000. And you'll see that a lot of projects get delayed. So if you ask me, I don't think they're able to fix this on the short term. So you still keep the high demand for housing, and therefore it's also not expected that prices will drop dramatically in the near future. All right, we're quickly going to take a sip of my water, and then we're going to continue with the topic of savings. Very important to know, of course, how much do you actually need in order to be able to buy a home. The first thing is, it's an overview of the buying cost, right? The first point is the transfer tax. We just discussed that this typically is 2%, but if you're below the age of 35, you buy a property below 440,000 euros and it's your first property, you're exempt from paying the 2%. Let's say you buy with a partner. You are 33, but your partner is 37. That means that only one of you has to pay the tax, so you end up paying 1%. Then the notary, right? In order to make everything official, you need to go to the notary. The mortgage deed depends a bit, but typically between 700 and 1,300 euros. Good to know, everything that is mortgage related is tax deductible. So the mortgage deed, yes. Transfer deed, similar numbers, not tax deductible. Then in order to apply for a mortgage, you have to reach out to your bank or a mortgage advisor. I always recommend to talk to a mortgage advisor. Why? If you reach out to your bank directly, they're able to provide you with a few different types of mortgages. But an independent mortgage advisor is able to provide you with a mortgage from, let's say, 30 different banks. And every bank has its own policy, right? So it could be that one bank is a bit more strict on self-employed people, other banks are a bit more strict on the ground lease. All different things to consider. But more importantly, also the rates, they differ per week. So it could be that this week ABN is the cheapest, whereas next week it's ING. So the mortgage advisor knows where to go at what moment. So in the end, you find a mortgage that better suits your profile and probably the cheapest one as well. It is slightly more expensive but I always say, what is 1,000 difference on 30 years? Definitely worth it. Then our fee, if you decide to work with us, between 0.75 and 1% of the appraisal value. I'll tell you more about this at the end. In order to apply for a mortgage, the bank wants to know the market value, right, which is defined by the appraiser, typically between 700 and 900 euros. The technical inspector, 465. Interpreter, for those who do not speak Dutch, it is legally obligated to have an interpreter present at the notary to make sure that you know what you'll sign for. The bank guarantee, it's one of the clauses that is a part of the purchase agreement. You need to make sure that you follow your obligations from the contract. Therefore, you need to provide a bank guarantee, and this will cost you 250 euros. And then NHG, what we just discussed, in order to benefit from NHG, you have to pay 0.6% over the total mortgage amount, but it is beneficial since you get a discount on your interest rate. Then 3 tips to win the current market. I mentioned this in the beginning. Value. Very important to know the market value before you submit an offer. And I think I can explain this best to you by showing you an example. So we have this property in The Hague. The asking price is 395,000 euros. Wow. Like it. So what we did is a price research, right? So we looked for similar properties in the same building, street, or area. And we found out that the market value is actually 415,000 euros. It's a really nice property, a lot of competition, and you really want it. So in order to make the winning offer, you offered 435,000 euros. What people will say that you overbid by 10%, right? 40K or more or less. Well, what we say, no, you did not overbid by 10%, but you overbid by 20K, which is 4.8%, right? So keep in mind that the overbidding, you have to look at the market value, not at the asking price, because the asking price is just an invitation for you to make an offer. Let's say we have the same property, but different agent or different selling strategy from the agent. Now the asking price is 375,000 euros. We have the same research, right? Because it's the same property. Market value is still 415,000 euros. Purchase price also 435,000 euros. Again, people would say you overbid by 16%. No, you overbid by 4.8%, right? You have to look at the market value, and based on that, you can decide what to offer, and not on the asking price. Good to keep in mind that you can only finance 100% of the market value with your mortgage, right? So this overbidding, the 20K, you have to pay from your own pocket. The difference between the asking price and the market value, you can finance with the mortgage. Well, the market has changed a bit, right? I've mentioned that there's less overbidding. So we also see it the other way around. And that is also what makes the current market so complex. We have this property, the asking price is 450,000 euros. We did a price research and we see that the market value is not 450, but 425. If you offered 450, you might think, oh, I did not overbid, right? Because I just offered the asking price. Actually, you did overbid by 5.5%, right? So again, very important to check the market value before submitting an offer. Because the ideal situation, asking price 450, price research, we know value is 425, and the purchase price is 425. No overbidding, no savings needed. Ideal situation, I would say, right? Yeah, indeed, no differences between the value and the purchase price. Then let's talk about the offer. What is a winning offer? It's a good price, but not always the highest price. Because if we look at the example I just gave, right? We take the asking price 450, market value is 425, and you offered 450, but with a financial clause of 100%. And then the sellers might think, okay, they're not able to get a mortgage of 450,000 euros, so they will choose for someone else. Security to the seller, that is something they're looking for, right? So if you maybe have savings, please initiate that you have savings. Or when you work with a mortgage advisor, ask for a statement, right? Maybe your mortgage capacity is 500 or 600,000 euros. Yeah, then of course there's less risk for the seller, which gives them some security. Then offer the least amount of hassle. What do we mean by that? Maybe the sellers are moving back to their home country and they want to get rid of the furniture, and you rent a furnished property, and then it could be interesting for you to purchase or take over all the furniture. Or what I always say, please be flexible on the transfer date, right? It could be that the sellers bought a new build property that is only finished by the end of the year. Yeah, please do not demand them to move twice in 6 months. So yeah, be willing to wait a bit longer on the property, or yeah, for you to get the keys. And then last but not least, offer a personal touch, right? It's not per se the deal breaker or maker, but selling a property can be very emotional, right? The sellers might have experienced a lot of, or they made memories in the house, right? So often they do want to know who's going to live in the property, and they prefer to sell to someone who's really taking care of the place where they made those good memories. So yeah, please add this to the offer as well. Then tip number 3 is due diligence, right? It's very important to do your due diligence. And in order to do so, we have 2 parties, the technical inspector and the appraiser. And my question to you guys is, when do you think we book them? Is it before or after your offer gets accepted? I see after, before, after. All right. I'm going to show you the answer for those who did not see it already. Indeed, it's after your offer is accepted. I always say, basically, the first thing you have to do after you get a phone call or an email from the selling agent is to book the inspector and the appraiser, because normally you have like 10 days before you need to sign the purchase contract. And of course, you do want to know the market value, right? You do want to know how much am I able to finance with the mortgage. So the sooner you have your appraisal report, the better. And of course, the technical inspector are also very important, right? If, let's say, you did the inspection and the report says that you have 20K of cost and you did not expect that, then you can use those 10 days to negotiate with the seller, right? Most of the times you'll find a new agreement, like the seller says, okay, if there's a leakage, I'm going to fix the leakage, or you meet in the middle. But of course, you do need to have the information before you sign the contract, so you can maybe add clauses or change the amount. And then good to know, even after signing the purchase contract, you have a cooling off period of 3 days in which you're able to dissolve the contract without paying a penalty. If you would like to pull out after those 3 days, right? So if you, for example, book the appraiser too late and the selling agent is pushing you to sign, and apparently the market value is lower than what you expected, and you want to dissolve, you have to pay penalty equal to 10% of the purchase price. So of course, that's a lot of money, something you're not willing to do or you shouldn't do. So to prevent you from paying this 10%, please book them as soon as possible. All right, that was a lot of information. I am going to recap everything and explain how we as EHN can support you throughout the entire process. Before you start the search, I always recommend to talk to a mortgage advisor or your bank to sort out your finances, right? You do want to know how much you're able to borrow, but also how much you're willing to spend on the mortgage. Life is quite expensive at the moment. Every time I go to a bar or the supermarket, I'm like, wow, is it that expensive, right? So you might not want to spend every single penny on your mortgage. But once it's clear, you can start looking for properties. Funda is the main platform. Basically, all the properties are listed on there. Let's say you found something interesting, you can share the property with us, and we can help you with booking the viewing and attend the viewing with you. And during the viewing, it is important to ask some questions to the selling agent, like what are the expectations of the sellers? Do you already have some offers in? What's the procedure? So will there be a deadline or not? But of course, also to check the conditions of the building or the property. However, the most important thing I always say is that you need to feel at home. What I see with most of my clients, within a few minutes, they know whether it's a yes or a no. But the feeling itself, right, is not enough. So if you do decide to submit an offer, you come back to us and we will help you with the price research and the property document review. Again, price research, very important to know the market value before submitting an offer, since you can only finance 100% of the market value. And with the property document review, we'll basically check any documents related to the property, right? I mentioned in the beginning, every property has its own rules, restrictions, regulations. We'll inform you about those, but also from a construction perspective. So are there any issues with moisture, foundations, all those kind of things you need to know before submitting an offer. Based on the researches, we draft the offer. We will submit the offer for you, do the negotiations, and then hopefully we get the offer accepted. Once the offer is accepted, we just discussed, we'll directly or as soon as possible book the appraiser and the technical inspector. We'll wait for the reports. If everything is good, we can sign the purchase contract. If not, we can negotiate with the sellers, or if like there's really a lot of issues, then we do not proceed. But of course, we make sure we check everything. So that is not the case. Then you'll sign the purchase contract. After you've signed the contract, you have all the documents you'll need in order to start your mortgage application. It depends a bit on your bank, on your personal situation, and the advisor. Mortgage advisors are often a bit faster than if you go to your bank directly, but normally this will take about 4 weeks. And once your mortgage has been approved, you're almost there. The final thing left to do is to go to the notary and sign the mortgage and transfer deed. So this is the day while you become the official owner of the property. You get the keys. But before we go to the notary, we go to the property once more to do a final inspection to see if the property is in the same condition as when we signed the contract, right? Let's say the current owners, they broke something with their goodbye party or with moving out. Yeah, that is something you did not sign up for. So then we inform the notary about this and they will keep a certain amount in their account in order to fix it. But if everything's fine, you can sign the deeds and you guys are the proud owner of your new property in or near The Hague. That is basically a short summary of the process. What I said at EHN, we have a few different packages. With the Smart package, we are more like an online consult. So you would attend or book and attend the viewing yourself. And then from the moment you've decided you want to submit an offer, we step in. So we'll help you with the price research, property document review, offer submission, arranging all the third parties. We'll review the contract for you to make sure all the clauses are correct, you're protected. And we'll translate it, since you do have to sign a Dutch contract, and some transfer support. With the complete package, we are physically there for you. So then we'll join you to the viewings, technical inspection, final inspection, and the notary. The difference is, with the Smart, you pay 0.75% over the appraisal value. With the complete package, 1%. We could also support with new build properties. It's a bit of a different process. So if you're interested in buying a new build property, please have a look at our website and schedule an intake with us. That is it for now. Rafaela, are there any questions left?
Oh yeah, we have one question here. What's the appraisal value?
Yeah, so market value, appraisal value, those are terms that are used. Basically, it's the same, right? So if you apply for a mortgage, the bank wants to know what is the value of the house, right? And this value is defined by the appraiser. And that is what we mean with the appraisal value or market value.
Great, thank you. If you put down the bank guarantee, 10% rather than paying the fee, 1%, can this money be used to pay for the house or is only held as a deposit?
Yeah, I think there's some misunderstanding. So indeed, one of the clauses of the purchase contract says that you need to provide a bank guarantee equal to 10% of the purchase price in order to make sure you follow your obligations from the contract, right? What I explained in the timeline, like if you want to pull out after the cooling off period, they can use this 10% as a penalty. You have two options. So you can arrange a bank guarantee. This typically costs 250 euros, or you can transfer 10% of the purchase price already as a deposit. And indeed, if you pay the 10% as a deposit, they will deduct this from the final purchase price. So you pay less in the end. I hope.
Perfect. Thank you, Rick.
Answers the question.
There is another question here. Are there any rules for minimal residence period for expats who want to apply for mortgage?
Good question. It depends on the bank, but no. So everyone can get a mortgage. Again, this is also one of the reasons why I say please talk to a mortgage advisor, because indeed there are certain banks that require you to stay for example, 6 months in the Netherlands, but not every bank has this. So they definitely know where to go. But in general, everyone can get a mortgage, so that's not a problem.
Great, thank you. There is another question here. If the purchase value is 200,000, can I subrent, sublet the apartment after buying?
Good question. So there's a few things you need to consider. First of all, we saw that in specific areas, there's a self-occupancy obligation. So then you're not allowed to rent it out anyways. And the other thing you need to consider is your mortgage. So with a residential mortgage, it's also not allowed to rent it out. You can change this to an investor's mortgage, as they call it, but there are some differences. First of all, with a residential mortgage, you can finance up to 100% of the market value, whereas with an investor's mortgage, this is maybe 70, 80%. So your loan to value is less than with a residential mortgage. And also the interest rates are different or higher. So those things you need to consider. But if you buy a property with an investor's mortgage for 200,000 euros on a location where it's allowed to rent it out, then yes.
Another question from Nick. Is there a salary-related limit to the mortgage, or only the market value is important?
So yeah, your mortgage capacity is based on your salary, right? On your income. Yeah, there's no limit, but yeah, it is important to check what your capacity is and what your options are before submitting any offers.
Perfect, thank you. One question from Pablo. I understood that the market value was established prior to the offer, so an informed offer can be done. Is this the case?
Yes, good question. So what we as buying agents do is we do a price research, and basically we do the exact same thing as the appraiser, right? So we look for comparables, and based on that, we can see what the actual market value is. Of course, it's not a guarantee because every different appraiser comes up with a different value, but it's in line, right? And what we also do, or what we can do, is sometimes it's difficult for us to find good comparables because it's a very unique property. Then because of our network, we are able to reach out to an appraiser to make sure we know the value in advance. So we never experienced that there's a huge difference between what we communicated to our clients and the actual value, because we validated this or on data or with an appraiser.
Perfect, thank you. So what's the minimum amount of own money you need to have to buy a house? So what you need from savings?
Yeah, good question. Yeah, what I said, it depends a bit on your personal situation, right? But to make a quick calculation, notary around 2,000 euros, technical inspector, I do recommend to hire a technical expert, 465, appraiser So let's say 800 euros. Mortgage advisor, 2,500. So I think around 7,000 euros. But then that's considered, or then transfer tax is not included. So if you do have to pay transfer tax, please add the 2% over the purchase price. But if you want to have a look, we'll share the presentations, so you have the overview and so you can do the calculation for yourself.
Great, thank you, Rick. Ida, she's asking, what are the limitations to getting a mortgage with a fixed term work contract?
Yes, so a lot of you might have heard that you need a permanent contract in order to be able to apply for a mortgage. There's also other ways. So you can ask for a letter of intent from your employer. And with this letter, the banks are also willing to give you a mortgage. So it doesn't mean if you don't have a permanent contract that you cannot buy a property. You just need to provide this letter. And yeah, most employers are willing to give this because it's not legally binding for them. So even though they said, okay, we're going to give you a permanent contract and they didn't, yeah, for them, it's not a problem. So, yeah.
Thank you. Mariana is asking, is it possible to hire a mortgage advisor after getting an offer accepted?
Yes, it is, because indeed you only start applying for a mortgage after your offer is accepted. However, we always advise to at least talk to them, right? So you know your capacity. And what I find very valuable with if we already have a mortgage advisor, that they can provide statements, for example. So when I submit an offer for one of my clients and I know the mortgage advisor, then I ask, hey, can you write a statement to make the offer more attractive? So I'd recommend you to already talk to them, but it is possible to choose or reach out to an advisor after the offer is accepted. Yeah.
Thank you, Rick. Martin is asking, in case I change my residential to investment, would I need to pay the difference in transfer payment from 2% to 10.4%?
Good question. So if you own the property, right, if you lived in the property for, let's say, a few years and then you change your mortgage, yeah, then you don't pay any transfer tax on that because you're still the owner, right? So no tax on that has to be paid.
Great, thank you. There's another good question here. I can't include transfer tax in the mortgage and also bid amount.
No, so the transfer tax is something that you'll need to pay from your own pocket. Yeah, those are the so-called buying costs. Back in the days, it was possible to finance those as well, but nowadays that's not possible. No.
Perfect. We have one last question here. In the eyes of the bank seller, how good of a buyer are you if your savings are higher than your annual income?
Yeah, I think if you have higher savings than your annual income, you did a great job. And what I said, right? If you have the savings, you're able to provide security to the seller. So that is definitely an advantage over someone that needs 100% financing. Yeah.
Perfect. If I start the whole process now, as in contacting mortgage advisor, agency, etc., would it be realistic to be able to get the keys within the next 3 to 4 months?
Good question. Normally, from getting an offer accepted to signing the deeds, right? So the transfer date, this will take about 2 months. How fast you get an offer accepted, yeah, that depends a bit on what kind of offers do you make, how picky are you in the properties. But I would say 3-4 months is definitely possible. Yeah.
Great, thank you, Rick. I think we covered all the questions now.
All right. If you guys have any other questions, please feel free to schedule an intake with us. Then we can look into your personal situation. Again, I will share the slides with you. And I want to thank you for being present. Have a nice evening and hope to talk to you soon.